Hello and welcome. This is from the CBN. We bring to you weekly reports and expert analysis of the actions, policies, and economic initiatives of the Central Bank of Nigeria, CBN. I am Muda Yusuf. Latest figures from the National Bureau of Statistics put February inflation in Nigeria at 15.70%. The rising trend in inflation is a global phenomenon, which in part is as a result of crude oil market supply conditions around the world. A World Bank blog noted that today's inflationary surge is being felt by the advanced economies, but also by the majority of the emerging markets and developing economies. And though its causes vary across countries, the task of resolving the problem ultimately will fall to the world's major central banks. For its part, the Central Bank of Nigeria has been strategizing to boost non-oil export earnings and deliver the economy from over-reliance on crude oil proceeds. Today, we continue with our conversation on the CBN RT200 FX program, which is meant to achieve that goal. But first, let's bring you the top story from the Central Bank of Nigeria this week. The Central Bank of Nigeria's Monetary Policy Committee met on Monday, the 21st, in the face of heightened geopolitical tensions and persisting macroeconomic uncertainties associated with the recent Russia and Ukraine crisis and headwinds stemming from the lingering impact of the COVID-19 pandemic. The committee reviewed developments in the global and domestic environments in the first quarter of the year and the outlook for the rest of 2022. By a majority vote, the committee decided to retain the benchmark interest rate at 11.5% along with all other policy parameters.
Members were of the view that tightening the stance of policy to rein inflation could adversely impact the fragile recovery of output growth and may stifle the expected investment expansion. In summary, MPC voted 1. To retain MPR at 11.5%, 2. Retain the asymmetric corridor of plus 100 and minus 700 basis points around the MPR, and 3. Retain CRR at 27.5%, and 4. Retain the liquidity ratio at 30%.
We shall bring you details of the CBN Monetary Policy Committee March meeting as well as the question and answer session of the press briefing in the next episode of the program. Up next is the RT200 FX conversation after this break. Stay with us.
North, South, East or West, male or female, old school or millennial, rural or urban, the Naira is the same, and so is the e-Naira. The e-Naira is a legal tender issued by the Central Bank of Nigeria. So, let's embrace it. The e-Naira will foster financial inclusion, improve access to credit, facilitate cross-border remittances, and it's easier to transfer. E-Naira, same Naira, more possibilities. This message is from the Central Bank of Nigeria, CBN.
Welcome back. The race towards the repatriation of $200 billion in export proceeds over the next 3 to 5 years, codenamed RT200 FX program, is an initiative of the Central Bank of Nigeria aimed at increasing support for the non-oil export sector to boost foreign exchange revenue for the country. Ahead of the biannual non-oil export summit scheduled to hold soon, we started the conversation here on this program a few episodes back. And here's a third in the series of the RT200 FX program conversations.
We have here the Chief Executive Officer, Center for Promotion of Private Enterprise, CPPE, Dr. Muda Yusuf. Thank you for joining us on the program.
Thank you very much. My pleasure to be with you.
Now, we are to talk about the CBN RT200 FX program, but first, let's quickly discuss the February inflation figures in Nigeria. The National Bureau of Statistics, in its latest figures, puts February inflation rate in Nigeria at 15.70%. Some people are saying that the figures do not represent the current reality. Isn't it high time the MBS reworked the items in the basket of goods used to measure prices to calculate the changes in the cost of living to portray current realities. What do you think?
Yes, I agree perfectly with you. If you look at the basket of goods that the average Nigerian buys, or basket of goods and services that businesses also patronize, in the last 1 year, you'll be talking about an inflation of between 30 to 100%. And even by some accounts, and with regard to some products, we have seen an increase of close to 200%. So when you now compare that with the NBS figure of 15.7%, this is a very wide gap. That is not to dispute the validity of the figures of the NBS. It's a question, just as you said, about the methodology. It's a question about the kind of product that are in the basket that was used for the computation by the NBS. It's also a question of weighting some of those products, because some of the products in the basket have much bigger implications for the welfare of the people, for businesses, for survival of SMEs, and so on and so forth. So I think that they need to rework the entire methodology of the computation of inflation rates so that it will reflect the impact that these things are having. If you go out there and tell people that in the last 1 year, prices have gone up by only 15.7%, people will they will laugh at you. Now, what are you talking about? Talk to the average person that goes to the market, or even the average business people. They are talking about close to 50% of many of the products. And I saw even a research that was done by one of the economic research agencies. You could see items, some of which had gone up by over 200%, some even 300% in the last 1 to 2 years. And if there's anything we need to worry about in this economy today, both from the point of view of the citizens and the point of view of businesses, especially the SMEs, it's about inflation. Because the impact has been very excruciating, it has been very devastating, it has been affecting the welfare of the people, it's worsening the poverty situation. And it's almost creating some level of social discontent among the citizens. That is why sometimes even some of the important reforms that government wants to push through government has not been able to push through some of those reforms because of the pain and anguish that high inflation, galloping inflation has inflicted on the citizens. So something needs to be done, both in terms of the methodology and in terms of even addressing the challenges that inflation is posing to the economy.
All right. Still talking about inflation. A World Bank blog says that the current surge in inflation is a global phenomenon, though it is caused by different things in different economies. How would you recommend that we deal with the inflation rise in our own economy here in Nigeria, considering it's not peculiar to our country alone?
Well, the inflation phenomenon is a global phenomenon. But again, there are local peculiarities. There are factors that are global, there are factors that are local. The global factors, of course, we'll be talking about the energy prices, which is driven largely by the conflict between Ukraine and Russia. We saw how that has driven up commodity prices, oil price, and the price of gas because of the strategic role of Russia in the global energy market. So that is understandable. But there are also local factors. For instance, the issue of insecurity. Insecurity is a local factor because it's affecting a whole lot around the agricultural output space, which is contributing a lot to food inflation. The exchange rate situation, the currency depreciation is also a factor, which is also affecting a whole lot of prices. Then there are issues of logistics. The logistics chain, in this economy is a very, very difficult one. You know, take somebody who's picking a cargo from the port, through the roads, through the checkpoints, through the bad roads and all of that, very laborious documentation and all of those things. So those things also contribute. Then we have the trade policy effect. You know, trade policy is about what you are allowed to come in, what you don't allow to come in. It's about the kind of import duty you impose on some of these things. This is also has some effects.
All right, moving away from inflation now to the newly introduced initiative of the Central Bank of Nigeria. The initiative is one of the efforts to steer the economy away from overdependence on oil revenue. Do you consider that initiative ambitious?
Well, it's a bit ambitious in my view. And I say that because you need to relate to where we are coming from, which we can regard as the baseline. Now, if you look at the recent trade report by the NBS, non-oil exports accounts for about 12% of total exports. And that is also reflecting in the export earnings. When you compare the earnings from non-oil exports to that of the oil exports. So if right now we are just talking about 12%, and we are probably talking about something less than 10 billion US dollars. And we are talking about moving to 200 billion in 3 to 5 years. That's obviously ambitious. But there is nothing wrong in being ambitious. At least if you are aiming for the stars, if you can't get to the stars, you can get to the moon. It's still some progress. So there is nothing wrong with that. But we need to address some of the fundamental issues that can make this aspiration realizable. First is to deal with the issues of the structural problems. Because export is about production, export is about productivity, export is about competitiveness. And all of these issues are not exactly within the monetary space. They are not within the purview of the Central Bank of Nigeria. What the Central Bank can do is to support exporters with finance. But it's one thing for you to have the finance. It's another thing to have the environment in which you can produce competitively and in a way that you can compete globally and regionally. So we need to deal with structural issues that will enhance productivity, that will enhance competitiveness. So in that wise, we'll be looking in the direction of the fiscal authorities. What are they doing about our infrastructure? What are they doing about our ports? What are they doing about our railway system? What are we doing about our logistics chain? Because if we are talking of exports, non-oil exports, we have to move a whole lot of things around the country before it gets to the ports, then for onward transmission to destination. So the structural issues are very, very key. Of course, related to structural issues are issues of power. Power is very critical to production, which is also critical to competitiveness. So those things are very, very important. The second very important thing is the exchange rate itself. Because for those who are exporting, yes, I must commend the whole idea of the rebate. But those who are exporting want a free access to their foreign exchange proceeds. Because as DG of the Lagos Chamber at the time, a number of exporters have come to complain to me that they are having issues with the exchange rate at which export proceeds will have to be converted. That they would rather prefer that they have a free access, unfettered access to their foreign exchange. So if that is done, that will also provide a whole lot of incentives for exporters. And it will encourage a lot more of them to even be compliant, because right now we have compliance issues with the NXP. And this is something that the central bank itself has been expressing concern about, that there is no full disclosure about the export process. So the CBN has to put in place some other frameworks involving the shipping companies and all of that to ensure that there's compliance, which is not a bad idea. But the fundamental issue of access to their export process is very important. The second very important point is the flexibility of the exchange rate in the investors and exporters window. If the rate in that window is flexible and is market reflective, it will also provide a major incentives, to ensure that exporters respond in terms of bringing in a lot more process into the economy. Then we have to look at the whole gamut of how the Export Promotion Council is also supporting the exporters. We need to review their processes. We need to review the structure of the incentives and determine which one is working, which one is not working, and how we can improve on the incentives. All of these things will require a very robust engagement with exporters in the economy, both with the CBN and with the Export Promotion Council, so that all of these issues can be identified and appropriate strategies can be deployed to ensure that we realize the aspiration of the RT 200.
The RT 200 FX program is expected to be a game changer, creating jobs and increasing forex flows into the country through non-oil exports, particularly agricultural goods. Now, how can young Nigerians who form the larger part of the country's population key into this program? How can they be encouraged to see opportunities in this?
Well, the young Nigerians have a lot of opportunities that can be explored in this space. But it is also important that we create the environment to attract the young Nigerians into the space. Because, of course, we are looking at much educated people. We are looking at young people that will be able to use technology to facilitate production and things like that. So the environment must be such that it will be attractive to them, both from the point of view of the quality of the ambience and the operating environment, and the point of view of the returns on investment. Those things are key. So the more we are able to bring technology to bear on the activities around the non-oil exports space, the more we'll be able to attract a lot more young Nigerians. That is one. And let me also say that export is not only about commodities.
Okay.
It's also about services.
Yes.
And if you look at the structure of the Nigerian economy, the services sector is contributing about 53% of our GDP. And our young guys are doing a whole lot in the services sector space. Take the ICT sector, for instance. Take the fintech and all of these young things that guys are doing around ICT, software development, and so on and so forth. A lot of that is happening, and a lot more of that can still happen. Take the entertainment industry. These are also some of the areas that the CBN has been supporting. It's a service sector. Look at what the young people are doing in that space, And of course, talk about financial services and all of that. Quite a lot is happening. So when we talk about these exports, we should also be looking in the direction of services export, because we have a very strong competitive edge in services. So if you look at all of that, we encourage the youth to do a lot more in the area of commodity exports, production, and look at how we can get them involved in the value chain. Because when we talk about this export, it's not just about the primary product level. It's also about the entire value chain. That is from the farm gate, for instance, from the primary production to the transportation to the processing, to the packaging, to the logistics, to the marketing. You know, all of these things provide a whole lot of opportunities for young people. So there has to be a lot of sensitization, and we need to make the entire chain very attractive to them. Not everybody has to go to the farm. There's a whole lot that can happen after getting out of the farm in terms of ensuring that you have a very robust value addition. So these are some of the areas I think we can encourage the youths, the young Nigerians, to key into.
Right. In answering that question, you have already taken care of the next one. I wanted to ask what other non-oil exportables that Nigeria have the capacity to earn sustainable forex inflows. But you've already mentioned the entertainment, you've already mentioned the ICT and the rest of it. So let me ask
you. And even that, if I may just add.
Okay.
Our young people are doing a whole lot in the area of sports. You know, because they are very talented people. A lot is happening in the area of trade. Because when we talk about all this business, trade is also part of it. We have our young people doing business, trading across borders. Some of them have set up businesses outside the country. It is not for nothing that we have diaspora remittances of over 20 billion annually. It's coming from somewhere. You know, this is almost comparing with what we are getting from the oil sector. So these are also reflections of what is happening in the service sector space. Look at even our religious organizations. Although sometimes we don't even reckon with it, but many of Nigerian churches are all over the world.
Yes.
They have foreign exchange implications. Sometimes we just look at the spiritual part, but there's also an economic angle.
Economic part.
To it. The other time I went to some West African countries, I was amazed at the strong presence of Nigerian churches in those locations, doing extremely well. And I was looking at the economic implication of that for us. It's very good. It's export. We have a lot of people even coming here for spiritual tourism. You know, coming to all sorts of churches in Nigeria. Sometimes you don't reckon with all these little things, but they matter. By the time you put all of these things together, they have a way of strengthening our balance of payment position. Because export is very key. When you look at the national income equation, export is a positive variable in the income equation. Import is a negative variable in the national income equation. That's to show you the importance of exports in an economy, whether it is physical exports or merchandise trade, or even services export, or even the attraction of capital into the economy. Has to be reflected in the capital account under the balance of payment position. So all of these things are equally important.
That is very insightful. So let's hear from you. Who do you think are the critical stakeholders that should be part of that biannual summit that is coming up shortly?
Well, the critical stakeholders are all the stakeholders involved in the value chain. Because we must be looking at these things from the perspective of the value chain. We start from the primary production into those who are, moving these items, the logistics providers, the marketers, the operators at the ports, the documentation, and those who are providing their finance. So we need a whole gamut of all of these things. We also even need some of our diaspora participants, because they're also remitting a lot from abroad. Because it's not in all cases that migration is a bad thing. Migration can also be a very good thing. If you are a country that is getting over $20 billion, they are coming from Nigerians that have migrated. Is that not impacting on the economy? Yes, it is. So the whole gamut of players in the value chain should be part of this summit, so that all the perspectives can be properly captured, and that will enable the government, the CBN, and all the other critical agencies of government to identify what the issues are and to be able to come up with a strategic framework to deal with the challenges, to break down the barriers so that the RT 200 aspiration can be realized.
We'll leave it there for now. Many thanks for speaking with us. Chief Executive Officer, Center for Promotion of Private Enterprise, CPPE, Dr. Muda Yusuf.
Thank you very much. My pleasure.
That's all we have from the CBN this week. You can report unresolved banking issues to the CBN Consumer Protection Department through the email address cpd@cbn.gov.ng with relevant documents. Call the CBN Contact Center using the phone line +234 700 2255 226. Local call rates may apply. Send in your inquiries and comments to the dedicated email address from the cbn@gmail.com. Follow us on Facebook, YouTube, Instagram, and Twitter for updates and uploaded episodes of the program. We invite you to join us again next time. I'm William Nisidada. Stay safe and bye for now.